Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 24th of February. I'm Daniel Lam, your host for the podcast. About 15 years ago, I remembered very well that a strategist was saying that China's GDP growth has slowed, but it still added an entire year of Australian GDP to its economy per year. Fast forward 15 years to now, the fall in market value in one of the Mag 7 stocks since the end of October last year is equal to the entire value of the Spanish or Italian stock markets. So this was even more fascinating than the previous comment on China's GDP, because a 3.5-month drawdown of a single stock in the US can equal to the entire stock market cap of a major European economy, talking about concentration of the world stock market. However, as we pointed out in yesterday's podcast, investor sentiment and the market conditions of the S&P 500 has stayed broadly balanced and normal. This is because, despite some leadership rotation, there has been a double rotation that has absorbed this drawdown. So the first rotation is a rotation within the technology stocks. So for example, other Mag 7 stocks have been rising as the fall in the aforementioned Mag 7 stock took place. The market is deciding which of the internet winners in the technology sector will move successfully to become AI winners. The second reason preventing a broader drawdown is the rotation from technology stocks into non-technology ones. So what has been happening? Well, despite the trend of falling inflation, it is still above target, and the signaling of further rate cuts from the Fed is depressing the real bond yield and real interest rates. And that is stimulatory for the economy and the stock market. And this would help and lead to rotation into the more cyclical value sectors. All in all, we believe the US is still enjoying a Goldilocks macro environment. The recent economic data, such as the February Philly Fed survey, is signaling expanding manufacturing activities, while the recent CPI is showing a continued falling inflationary trend. This is supportive, and we continue to advocate adding US equities on pullbacks, for example, at 6,700 and 6,500 for the S&P 500 index. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.